All right, everyone's favorite stock, Tesla. Wow, shares up more than 600% this year to date. And right now, Tesla going to take advantage of that share surge by going back to the capital markets for the third time in 10 months, raising as much as $5 billion of common stock. Joining us right now from San Francisco, Bloomberg Deals reporter Ed Ludlow. Ed, I guess this isn't surprising. I mean, given the share run up, it kind of makes sense that they would take advantage of this. I am curious as to where we stand right now with Tesla's cash stockpile. Like, how flush are they at the moment?
Yeah, so as of September, there was around sort of 12 and 14 billion cash on hand. You know, if you look at what they could raise, it could take them to nearly $20 billion, much greater than most S&P 500 companies. And if you read across Wall Street what the analyst notes are saying today, this was a prudent move, as you say. The run up in the share price makes the cost of capital for Tesla very attractive, but they also have an incredibly large to-do list. There are a lot of projects all around the world, a new factory in Europe, a new factory in Austin, Texas, an expansion of the factory in Shanghai. And it was long a criticism of Tesla, right, from Wall Street. When are they going to deploy the capital needed to grow? When are those CapEx numbers going to come up? And so, you know, reading today, this has been greeted positively and really sets them up for all of the projects that they have to do in 2021.
But also paying down debt, right, Ed? And that credit rating profile's got to be looking a little prettier.
Yeah, I've been reading across Bloomberg Intelligence. I've been speaking to Joel Levington. And beyond him, Wall Street generally see Tesla's debt load as manageable. But it has been a stated ambition of Tesla to pay down that debt. It's also been a thorn in the side in terms of the bears, because they would often point to Tesla's debt loads and their ability to pay it down. However, you know, Elon Musk has been speaking today saying it is a priority. We will pay down the debt. But the priority seems to be a war chest, that it needs capital to deploy for all of their technological prowess and a lot of what's been driving the valuation being based on their battery technology, on their software around self-driving. You forget that the automotive industry is a capital-intensive industry. You just have to look at the kinds of capital, the volume of capital that Ford and GM are deploying, for example, to electrify their own fleets. And so that is what Tesla is looking at, a series of big projects, new products in 2021, and it's going to take them to spend money to get there. It also ties quite nicely to profitability. One of the things that Elon Musk has been talking about this year is that it's easier to be profitable and efficient when you are producing vehicles at scale. Tesla might deliver 500,000 vehicles this year, but it wants to grow that to around 20 million by the end of the decade. If you're building at those volumes, then your bill of raw materials is much more efficient. The battery packs are more efficient, and Elon Musk's hope is that that will boost their bottom line as well.
Ed, the one key thing to watch for this company in 2021, what is it?
Cybertruck. I'll never forget being by that stage last November when that came out. No one could believe it. Were they being serious? But the demand for that product has been intense. The pickup truck is beloved in America, and we're all waiting for someone to electrify a pickup truck. So if they can pull it off and start delivering Cybertrucks by the end of 2021, as Elon Musk has said they will, then I think that's going to be a really big one to watch in the next 12 months.